Assalamualaikum. Welcome to video 22 IAS 40 investment property. Once again, this standard is tested in both SBR and FR. So, IAS 40 defines investment property as those property which earns rental or cap or from capital appreciation. So, if the land or property is held to earn rent or for capital appreciation or both. Remember, the property, plant and equipment that is used in the business is accounted under IAS 16, but if it is used for investment purpose, for example, to get revenue through rent or when the capital amount of the property increases, you sell it. That's an investment property which will be dealt in IAS 40. Therefore, the users of the property will help you to decide which standard you have to use, IAS 40 or IAS 16. Now, investment property is not an owner occupied property that we have just covered under IAS 16. Property held for sale in the normal course of business is not an investment property. It will be dealt under IAS 2 inventory. I've finished both IAS 16 and IAS 2. Next, property that is being constructed for third parties will be dealt according to IFRS 15 revenue. Then, property that is leased to another entity will be dealt under IFRS 16. So, the accounting treatment. Here, entity can choose between cost model or fair value model. The cost model under IAS 40 is the same as the cost model in IAS 16. Fair value model requires the investment property to be recognized in the statement of financial position at fair value. The gain and loss from the revaluation will go in the statement of profit and loss. That's the only difference. Why? Because under IAS 16, revaluation gain goes to OCI and revaluation loss goes to profit and loss. But here, whether it's gain or loss from investment property, it will go in statement of profit and loss only. Now, one example. A company has purchased a property for 1 million. Land component is 400. Expected useful life is 50 years. Property had a market value of 1.1. Property is not occupied by the company and it has been purchased for the investment. So now it's an investment property. Okay. So now what happened? What is the accounting treatment? Using the cost model. Remember, you have to take the land out because we do not depreciate land. So the total 1 million, you have to take the land out, which is 400. So the cost of the property is only 600,000, which you will divide over 50 years. Your depreciation will be 12,000. Okay. So that 12,000 you will deduct from 1 million and get the carrying amount in the statement of financial position 988,000. Under the fair value model, okay, you will recognize the property at 1.1. So from 1 million at 1.1, what is the gain? 0.1. That 0.1 million gain will be recorded in your statement of profit and loss. Investment property are not depreciated. Okay. If the company purchase any further investment property, you have to account it using the same basis. Okay. Thank you for watching, and I shall see you in the next standard, that is IAS 41, that is agriculture. So with this, I have finished almost all the standards that is relating to non-current assets, both tangible and intangible. They are IAS 16, IAS 38, IAS 40, IAS 23 borrowing cost, government grant, IAS 20, 23, IAS 16, IAS 38 and IAS 40. All these 5 standards focuses on measuring non-current asset, whether to capitalize or not. And if it is capitalized, cost model, revaluation model. So that's the major theme. Now, see you in the next standard.